Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, March 27th, 5:10 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days way back in November 1st and 2nd. You can see the trend gauge over here. We've got the coveted 4 green arrows. But leaders with the yellow sub arrow today, we're going to get into those numbers in a while. Anybody that was invested in leading stocks today will know why that yellow arrow is here. But as far as overall index strength, all 5 of the major indexes are trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So what happened today? Definitely a weird day in the market. Indexes, all 5 of them green, and all 11 of the S&P sectors green, but leaders took it on the chin today. Not everyone, of course, nothing's ever absolute, but quite a few to the downside today. We'll get into it when we get into the charts. Here are the final numbers on the day. The big 7, there was some laggards here as well. Down an average of 0.34%, NVIDIA down 2.5%, and Netflix down 2.5%. RG8, this is our 8 growth ETF composite. This really didn't get hit. It was up almost 1%, but one of the 8 components in there, the IBD 50 FFTY ETF down over 1%. The IBD 50 obviously made up of leadership quality stocks. S&P 500 opened up 0.6%, pulled back quite a bit. Complete opposite of yesterday into the close. Actually, opposite of, we had weak closes the prior 3 days, but today, straight up the last 30, 40 minutes, ended up near the high of the day, up 0.86%. Even better from a breadth standpoint, equal weighted S&P up 1.6%. NASDAQ 100 was the laggard index today, down 1/3%. Equal weight up 0.9%, though. Again, there's the breadth. Dow Jones Industrial Average up 1.2. Midcaps up 1.6. Russell 2000 up 2.13. There's the positive breadth again. Global 60/40 up 0.58%. In-house GROTECTION lagged, only up 0.42% as we were dragged down by leading stocks. Take a look at this, and this is, if you've listened to us for a while, you know why that we kind of split our portfolio between leading stocks and between leveraged ETFs to balance out days like today where rotation is taking place, because all that rotation gets caught inside the S&P 500 when you go from growth to value or vice versa, defensive sectors to momentum sectors or vice versa. All that happens within the S&P 500. So if you were a pure growth investor and you had 12.5% positions all in, and this is a very reasonable 8 stock portfolio that you might have today, look how these got crushed. Your portfolio would be down almost 4% on the day, while you're looking at the NASDAQ 100 up 1/3%, the S&P up 0.9, and the Russell up over 2%. Now, how do we temper this? Well, look at this portfolio. This is the same 8 stock portfolio, but if you cut it in half, and instead of 12.5% positions, these are 6.25, and the other half is in SSO. SSO is up 1.68% today. So your portfolio would have been only down 1.14%. Now, this, of course, means that on days when leaders are taken off to the upside and the S&P is kind of getting left behind, that you won't get the direct opposite 4% gain if all of these were straight up. But this is a trade-off we, through a lot of trial and error, have learned is best for our clients, also best for mental capital as well as financial capital, because leading stocks do 2 to 3 times the expectations of the market. Some of them much more if you got a true leader, a true market leader. But a lot of them don't outdo 2 times the S&P 500. We don't buy anything that we can't think is going to do 2 times the S&P 500. because we might as well just have this whole portfolio in SSO. And well, anyway, that's the way we do things here, and it smooths out the rough edges. We want our equity curve to go from lower left to upper right, as if it's driving smoothly from Arizona to Maine, not going up to Colorado, back down to Texas, up to Chicago, back down to Florida before heading up to Maine. We want a smooth path, and clients appreciate that too. So let's get into the charts here. We'll start off with the S&P 500, and after 2 days up, we had a 3-day pullback right to the 8-day exponential moving average, and you can see us closing at the all-time high, not an all-time high close, not necessarily an all-time high, as we still didn't exceed that euphoric gap up after the Fed last week. But let's look at this on a 15-minute chart. Here's the ugly sell-off yesterday into the close. There was just a massive market on close sell imbalance, and that helped to drive that down into the close yesterday. But look at the complete opposite is what we got today. Another fairly tight range day, not as tight as the prior 2 or even 3 days, but there's the euphoric gap up. We've been talking about this 5174-ish pivot, and we haven't even approached it yet. So not everything that we bought is working. We've got some leading stocks that we got stopped out of, but it's a lot of non-tech leaders that have been holding up better. And again, you don't want to be all in tech. You want, and that's where one of William O'Neill's tenets was: you get your diversification through sectors that are acting well. And there are multiple sectors that are acting well, and that's the approach that we take as well. NASDAQ 100, not an all-time closing high. This is a nice looking little bull flag here. Had some relative strength last week, minor relative lagging this week. But we'll take it. We've got some ugly in the NASDAQ 100. Tesla up 2 days in a row. Okay, we'll update it from hot garbage to warm garbage as it closed above the 21-day moving average today, but still in a serious downtrend. And Apple also under the 21-day moving average, but offset that with some things that are acting very well. Meta just pulling back to the 21-day moving average. Amazon hanging up near all-time highs. Netflix gave some back today, but sitting on the 21-day moving average. Google responding over the last couple of weeks after the sell-off on its poorly displayed AI product. NVIDIA giving some back today. But Microsoft, can't forget Mr. Softy, pulling back in a nice little flag pattern as well. So that leads the indexes and also leads the NASDAQ 100. Let's go on to the Dow Jones Industrial Average. Not quite at an all-time closing high today, but up 1.22%. Looks fantastic. Mid caps, all-time high here after breaking out of this nice little 4-day consolidation. IWM, big update today, up 2.2%. New closing high from this recovery off the lows, and you can see that that's where the relative strength has been over the last 2 weeks in mid and small caps. All right, on to the VIX. The VIX was, despite the fact that leaders were getting smacked today, the VIX was looking at the S&P 500 and saying, hey, you're green, so I'm down. And it was down 3.5% at the close with a 12 handle now. That's that's you get stretched too far to the downside on the VIX, you're going to get a snapback, and that's going to hit the indexes. But these things move opposite, and when you don't get one without getting the other. Let's look at the dollar. This has been a bit of headwind lately, just barely up today, traded in a fairly tight range. But despite the dollar being higher, gold stocks breaking out, up 3.72% today was the GDX. We added to our nugget position today. GLD up 0.72%, silver up 0.76%, Bitcoin taking a break today, down 1.4%. On to bonds. Broad bond index higher. That means, and in fact, breaking, this is a 2.5 week high here on the BND index, which means that broadly rates are at a 2 week low, up 0.34%. Here's TLT. Nice little move up there, up a percent on the day, which means you're going to see the long bond down 0.93%, and the 10-year down 0.9%. If you ever wonder why we do this inter-asset correlation, it goes all the way back to the top in growth stocks in mid-February of 2021. And we've incorporated a bunch of indicators into our process, including the RG8 and this inter-asset correlation, to make sure that we know what the crosswinds and the headwinds and the tailwinds are coming from other asset classes that might impact growth stocks or just overall stocks in particular. All right, here's the tail of the tape now. You can pause it. I'll hit the highlights. Again, we've got that PCE inflation data Friday morning while the market's closed. Day count up to it's still a 4-day consolidation as we didn't make a new all-time high, but a nice up day today, 8 days above the 8-day exponential moving average, 55 above the 21-day. From a sector standpoint, lots of green, 11 out of 11. Add on to that solars, cannabis, gold and silver stocks, and regional banks to the downside. The only two that jumped out were software and cybersecurity, as a lot of leading stocks were in there. And as I've already mentioned, leaders took a hit today. So speaking of taking a hit, we got stopped out of the rest of our ARM position. We trimmed Nutanix on weakness, trimmed some Uber as well. We added to what's working, in this case, Nugget and FCX. We'll take a look at some of these charts momentarily, but the bottom line on the day, and it was kind of a strange day. Index is up, all 11 S&P sectors up, but most leaders down. Now, there's always some shenanigans that happen at month end and even more so at quarter end, and that just may be what we're looking at as people positioning themselves for the next quarter. Some people will have a big tax bill coming in the middle of April, and there may be some just people locking in their profits to pay those taxes. But regardless, odd day today. It's weird to see so much green while the leadership names themselves were most definitely not green. So let's take a look at those 8 names on a chart. Some of them I already showed, but well, actually, let's start off with the portfolio changes today. Here's FCX. Nice bounce off the 8-day exponential moving average. We added to that position. And Nugget. I showed GDX, but here's Nugget breaking out as well. On the downside, stopped on ARM closing under the 21-day moving average. We got stopped on half yesterday, the other half today. Nutanix also weak, breaking below the 21. We sold half of that. And Uber sold a third of our remaining position under the 21. It recovered the 21 in the big rally into the close today. Now let's take a look at NVIDIA, our largest position, weak on the day, above average volume, down 2.5%. I also showed Netflix with pullback to the 21-day moving average. CrowdStrike's another one that we own, undercut the 21-day, got back to the 21-day by the end of the day. Celsius, some sort of a marketing agreement with Pepsi, but it wasn't perceived well today, down 8.5%. Breaking the 21-day moving average on heavy volume. DraftKings, there's some talk about gambling, and I didn't read the article. It was something that negatively impacted all of the. There's a lot of people getting hooked on these applications and gambling, and stocks like this are going to take a hit from time to time. And today was one of the days for DraftKings to get hit. While Bitcoin pulled back, Coinbase did as well, down 3.8%. Nothing wrong with that chart. VRT, very strong, undercut but reclaimed the 8-day EMA, but down 2% on the day. And ANET down 3.16%, undercutting but holding the 21-day moving average. What you're seeing a lot with leaders, let's look at CrowdStrike for an example, is that they're consolidating but making lower highs. from a relative strength standpoint. If you're holding these, this is what you're getting is you're underperforming relative to the index. Now, leaders do all take a break from time to time, as you can see how strong this was up leading into it. I'm just pointing out that they're not screaming to the upside the way they were when this rally kicked off at the beginning of November. Okay, where else are we? Let's take a look at the rest of the portfolio. Weatherford, brief pullback today to the 8-day exponential moving average, MU. Update today. Look at the volume patterns on this. This is acting extremely well. I showed the Nutanix, Lilly, up today, up 0.42%, just trending higher above the 8-day exponential moving average. And recent add GPS down 1.55% on below average volume. But look at 4 days of a pullback now. Look at the pullback volume compared to the up volume. Big difference there. And that's why we got the starter position in this. I think that is going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner Dan Stewart is available. Dan@revereasset.com. Our flagship portfolio is named GROTECTION. CERT has a dual mandate that is growing stocks during uptrends. Growing our accounts is what I mean to say, protecting them during downtrends, such as the sell-off last fall and bear market, certainly in 2022. Since fourth quarter of 2018, the S&P has seen three bear markets, 0 bear markets for GROTECTION as we follow our technical rules to get out of the way. And if you're interested in this approach, by all means, reach out to us. And that's going to wrap it for Wednesday, March 27th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.